What if I told you that the way you manage money today has already been decided by events that took place hundreds of years before you were born? That the reason people struggle, the reason most never escape paycheck to paycheck, isn't because they're lazy or unlucky, but because the financial system itself was engineered to reward a specific type of behavior, a pattern only a tiny percentage ever master. And here's the strange part. Across every era, every economy, every crisis, the people who rise from nothing to wealth follow the same 10 rules, almost like a hidden script. Today, we uncover those rules, not the motivational cliches you hear online, but the timeless, battle-tested principles that built fortunes, survived collapses, and rewrote financial history. Money hasn't always looked the way it does today. Before apps, banks, stocks, or even printed currency, wealth was measured in livestock, land, labor, or gold. But across centuries, one truth remained. Some people always found a way to rise above their environment. From ancient merchants trading silk across brutal deserts, to industrial tycoons who built the modern economy, to today's investors quietly accumulating assets while the masses drown in consumer debt, their success came from repeating a pattern. A pattern built on decisions, habits, and principles that modern culture often ignores. This video traces that pattern from its origins, through its rise, to the breaking points where people and nations failed, and finally to the 10 rules that consist financial success even today. In the early days of trade, survival depended on 3 things: producing more than you consume, storing value for the future, using resources efficiently. These weren't optional. They were the difference between life and death. Farmers who saved seeds survived the next season. Caravans that invested in protection kept their goods. Families who managed risk avoided ruin. Here lies the first clue. Wealth began as practical survival habits, not luxury goals. As societies expanded, a new group rose to power. Not kings, not warriors, but traders. Traders mastered something crucial. They understood the flow of money better than the creators of money. They tracked debts, controlled inventories, priced risk, and reinvested profits. It was here the early money rules solidified. Spend less than you earn. Invest in what creates future value. Diversify to avoid disaster. Never rely on one source of income. These principles shaped the first wealthy families and merchant empires. But as societies grew richer, they grew reckless. And that led to the breaking points. History is filled with examples. The Tulip Mania, 1637. People abandoned fundamentals and chased hype. Prices skyrocketed, then collapsed overnight. Those who ignored money rules lost their fortunes. The Great Depression, 1929. Excessive borrowing, blind speculation, and no emergency reserves triggered mass collapse. Millions paid the price for ignoring basic financial discipline. The 2008 crisis. The same pattern repeated. Overspending, over-leveraging, ignoring risk, and believing this time is different. Each breaking point teaches the same message. Money doesn't destroy people. Misunderstanding money does. While governments printed money to recover, most individuals didn't. Average families adopted harmful behaviors that became generational. Spending increases with income, zero savings, no investments, only one income source, high-interest debt. Using credit as lifestyle fuel, believing jobs are security instead of skills and assets. These weren't personal failures, they were system-designed traps. Financial success became harder because everyday life encouraged the opposite of wealth building. But a minority, quietly, continued following the old money rules. Their results weren't accidental. Governments responded with financial literacy campaigns, student loan programs, easier credit, reduced interest rates, higher consumer spending incentives, and every one of these fixes backfired. People borrowed more, saved less, and invested nothing. Shockingly, today, 63% of Americans have less than $500 in savings, 72% have no long-term investment plan, 80% retire with insufficient funds. Consumer debt is at the highest level in history. The same patterns from ancient collapses repeat today, but on a global scale. Which brings us to the real reason you're watching this. The 10 money rules that survived every era, every crisis, every financial transformation. These aren't motivational quotes. They are the same rules used by merchants, millionaires, and modern investors. Rule number 1, spend less than you earn, always. This is the first rule because without it, nothing else works. Surplus is the seed of wealth. No surplus, no investment, no growth, no freedom. Rule number 2, pay yourself first. Ancient traders kept a portion of every sale for reinvestment. Modern wealthy people do the same. Set aside money the moment you get paid, before bills, before fun, before anything. Rule number 3, avoid high-interest debt like a plague. Debt is not evil. High-interest consumer debt is. It steals your future income and converts it into someone else's wealth. Rule number 4, build an emergency fund. Every crisis in history punished the unprepared. Those with reserves always survived and often emerged stronger. Rule number 5, invest early, consistently, and automatically. Wealth is not earned, it is compounded. Small contributions, big outcome. Delayed contributions, delayed life. Rule number 6, own assets, not just income. Jobs create income. Assets create freedom. Real estate, stocks, businesses, or intellectual property. These are the modern equivalents of ancient merchant caravans. Rule number 7, protect your money from yourself. Emotions destroy wealth more than recessions do. Automation, discipline, and rules keep you from making panic decisions. Rule number 8, diversify like your life depends on it. Because sometimes it does. No civilization, no market, no industry has stayed dominant forever. Rule number 9, learn continuously about money. The wealthy aren't smarter, they're more informed. Every era rewards the people who understand change before it happens. Rule number 10, build multiple income streams. 1 income is vulnerability. 3 is stability. 5 is independence. This rule is the modern version of ancient risk hedging. Today, people ignore these rules more than ever. TikTok attention spans, buy now, pay later addictions, zero savings culture, lifestyle inflation, job dependency, no investment literacy. Yet the wealthiest 10% follow every single rule. They save, invest, diversify, protect their downside, and build assets. History proves one thing. You don't become wealthy by doing what everyone else is doing. You become wealthy by doing what history rewards. 1, wealth is built on behavior, not income. Even a small earner with discipline can outgrow a high-income spender. 2, money follows rules. If you follow them, you win. If you ignore them, the system punishes you. 3, the game hasn't changed, only the tools have. The principles remain identical across 4,000 years of human history. We are entering the most unstable financial decade of our lifetime. Debt is at record highs, inflation is unpredictable, markets are volatile, technology is transforming jobs. The people who survive and thrive will be the ones who master these 10 rules. The ones who don't will repeat the same painful history millions have endured before. If you want more videos like this, deep dives, real stories, and financial truths school never taught you, hit subscribe, like, and drop a comment.